Mr. Satish Prabhu, it is a pleasure to have you with us today. What is the reasonable earning expectation one can have from the stock market?
This is a very simple formula. When you look at how much the stock market can give us, and obviously each stock can do better or can do worse. The GDP is expected to grow at around 6.5%, and inflation is around, say, 6% on an average. So if you take what we call as nominal GDP, is the GDP growth for the real GDP, plus inflation is around 12 to 12.5%. So assume 12%. That is the rate at which the stock market, because the GDP is the real representation of the economy at large. So the economy growing at 12%, the companies that we invest are likely to grow at a similar or a better rate. So obviously, companies, can do better than that. But on an average, you can expect the nominal GDP growth to be carried over by the stock market, and that is what it has been doing even in the past. So if you look at the past returns, and I showed you one of the graphs, in the past 25 years, the stock market gave around 12%. And that has been the average performance of the GDP as well. So I would say that that's around, and you should keep a watch on GDP plus inflation. That is the typical medium long-term returns that you can get from the stock markets.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also, you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free, and you can find the link in the below description. Please like, share, and do subscribe to Holistic Investment.